Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russian companies have reduced the cost of extracting oil from shale but not by enough yet to make it viable to exploit crude from reserves locked in rocks in the Bajanov Formation in West Siberia, analysts say. Russia is pinning its hopes on hard-to-recover oil, hidden beneath non-porous rocks, such as at Bajanov, as conventional oil reserves in West Siberia, its main oil-producing area, are falling. Gazprom Neft estimates that the reserves of the light, low-sulfur and low-viscosity Bajanov Formation stand at between 18 billion and 60 billion tons.
Australia's top two independent gas producers are confident their major new projects will be able to go ahead, even in the face of a massive expansion approved by the world's biggest liquefied natural gas, LNG, exporter, Qatar. Qatar Petroleum last week gave the go-ahead for the $29 billion North Field expansion, the world's biggest LNG project, planning to boost its LNG output by 40% to 110 million tons a year by 2026. To compete with that, Australia's Woodside Petroleum plans to give the green light for its $11 billion Scarborough Gas and Pluto LNG expansion in the second half of this year, while Santos Limited aims to sign off on its $3.6 billion Barossa gas development before July.
Moving on to the top news in the energy sector.
Sales of physical crude oil are gaining pace at higher prices following a rally in the futures market, traders and analysts said, as expectations mount of near-term increases in demand. Global benchmark Brent futures are trading above $65 a barrel, quadrupling in value since pandemic lows in April. In contrast to Brent futures, physical sales are near-term trades dominated by producers, refiners and trading houses. Their rise better reflects the real-time appetite for oil, which is growing as OPEC plus oil producers look likely to only gradually reduce their supply curbs in the coming months, and forecasters expect a demand recovery in the second half of the year on global vaccine rollouts.
Saudi Arabia's oil minister has called for a cautious approach to raising production, even as prices surge and many traders anticipate an increasingly severe shortage of petroleum later this year. We are in a much better place than we were a year ago, but I must warn, once again, against complacency. The uncertainty is very high, and we have to be extremely cautious, the minister said in a speech on Wednesday. In contrast, futures markets point to a rapid tightening of supply, with front-month Brent up more than $25 per barrel or 65% in just over 3 months since successful vaccine trials were announced in early November. Next, we have the top news in metal markets. Some resource-rich developing countries are seeking to rewrite mining contracts and accelerate dividend payouts, which can take years to materialize under deals that experts said are tilted in companies' favor. Any move to renegotiate agreements will trigger pushback by miners wary of threats to their profit margins, experts said, and previous attempts have caused protracted disputes. Mongolia became the latest country to demand better terms, asking for more tax revenue from Rio Tinto's Oyu Tolgoi copper-gold mine while it waits for dividends. In West Africa, Mali has said it would try to reopen mining contracts that leave the state waiting years for dividend payments.
Dalian iron ore futures jumped 7% on Thursday on expectations for a rebound in demand as top steel producer China returned from a week-long Lunar New Year holiday, with signs of an accelerating global economic recovery adding to the optimism. May iron ore on China's Dalian Commodity Exchange was up 7.1% at 1,131 yuan and 50 fen, $175.22, a ton by 0700 GMT, after advancing to 1,134 yuan and 50 fen, its strongest level since December 22. On the Singapore Exchange, the steelmaking ingredients March contract gained 1.5% to $169.40 a ton. Chinese steel mills are expected to ramp up production to rebuild stocks as many construction sites remained open throughout the holiday, and to meet future demand.
We will now look at the top news in the agricultural sector.
Russian agriculture consultancy Sovecon said on Thursday that it had downgraded its forecast for Russia's 2021 wheat crop to 76.2 million tons from 77.7 million tons due to unfavorable weather conditions and upcoming state export taxes. Russia could produce a substantially lower wheat crop in 2021. The main issue is that plants entered the current winter in the worst shape in a decade after an abnormally dry autumn. January was generally favorable for the new winter wheat crop, but February weather is not, it said. Russia, one of the world's largest wheat exporters, produced 85.9 million tons of wheat in 2020. Sovecon's estimate of this year's winter wheat production was reduced by 400,000 tons to 53.6 million tons, it said in a note. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.